Welcome to Second Take, the show that takes a look at the issues behind the news. Nersa has initiated a belated process to finalise rules for electricity traders. Terence Creamer joins me to discuss the move and what it says about the state of South Africa's transition and the regulator. Hi Terence.
Hi Chanel.
What is the background to this process and how long is it set to take?
Well, the background is that South Africa is going through a big transition in its electricity supply industry, and that traders are going to be a feature of that. And over the number of years, in fact since about 2014, so more than 10 years ago, Nersa started the first round of licensing traders. So there have been traders operating in the South African electricity sector for quite some time now. And we now have 10 licensed traders in total. In fact, more than that, because when NTCSA was unbundled from, or separated, hasn't been unbundled from Eskom, it also applied for a trading license and a cross-border trading license. So we've got a lot of these companies in the system. We've got another 3 that are applying that we know in August. And we've got indications from a number of large financial services companies that they also intend applying for trading licenses. So it's part of the future. It's already starting to happen. But last year, when the most recent 4 traders were licensed, Eskom Distribution, which is in the process of being separated as well out of the bigger utility, raised objections at the hearings to this, saying that they're saying the rules are not defined, whether traders can come into their area of operation, is that allowed, is this a cherry picking of markets? So that was the first red flag. Then in about, I think, October last year, Eskom said that they would be seeking a legal review of Nersa's latest once they had actually licensed those 4 traders. It's not clear whether that's proceeded. In fact, I don't think that court case has proceeded yet, because I think Eskom was waiting for some documentation, but they made it clear that they're objecting. And also in parliamentary hearings, the CEOs made it quite clear that there's a cart before the horse sort of situation, and we need the rules to be clarified. So now, as you say, belatedly, Nersa has announced that they're going to initiate a process starting in August and ending only next June. So it's an 11-month process to finalise what the rules are for domestic traders as well as cross-border traders. So that's really where we're at.
What happens to the licensed traders in the meantime?
So as I said, there's sort of 9 domestic traders and a cross-border trader license plus NTCSA. So they will continue. Now some of these are doing quite high-profile projects already. We know that we've seen a number of traders, signing up PPAs. What they do is they source supply and then aggregate that, and then they source customers. And they sort of, match that supply and that demand, and they are the facilitator. They use their platform to do that. We know that Eskom has also set up a virtual wheeling platform of their own, and that was another shock that was given recently, where they're saying they're not going to allow traders to access that platform, which was, never initially the indication. But basically, these traders are going to be part of ensuring that there's this sort of matchmaking between supply. RPPs are wanting more diversified off-taker base to de-risk their business. At the moment, previously Eskom was the only game in town through the public procurement rounds, and they would be the single buyer. But that counterparty is a risky counterparty. If you think about Eskom, it is not really a going concern without stakeholder or shareholder support, which is taxpayer support. So, that is risky if you've only got that as your counterparty. And also when you're doing large projects, say wheeling projects, if there's only one large mine or one large manufacturing entity that's your off-taker, that's also risky for the RPP, because things can go wrong in business. And so, if you lose that client, then you're going to be scrambling. So the idea from an RPP de-risking is to have these other multiple off-takers, traders being ideal, because they go and source the clients. Then on the client side, clients are looking for various reasons to diversify from either their municipal supplier or from Eskom. And the reason for that are manifold. One large reason is that they want more price certainty. Tariffs have risen sharply over a number of years, and there's still not really much certainty. Eskom keeps saying, and that the tariffs are not cost reflective. So where are those going to settle? Traders in some ways can say, well, we'll give you some price pass certainty. And the second reason is a number of companies that are export facing want to decarbonize their supply. They want to show that their business is as green as possible, especially as carbon border adjustment mechanisms come into play. These are going to start evolving initially out of the European Union, which is a major trading partner for South Africa. But in future, other countries are looking. The UK is looking at it, Japan's looking at it, Canada's looking at it, even the US was looking at it. So these are going to come in. So they want to be able to show that the electricity source is clean. So those are the sort of, and then the trader is the sort of the facilitator of matchmaking that clean electricity with the clean demand, and also helping IPPs diversify their risk.
What does this say about South Africa's unfolding transition and the regulator's role within that?
Well, I think that the fact that it's taken so long to start considering these rules, whether, it just shows that this transition is facing headwinds, and we're seeing that all over the place. We're seeing it also with the retail market that we are setting up. There's a lot of misunderstanding. It took a very long time to set the wheeling rules in place. Those are now in place. So there's a lot of moving parts to this transition, and the regulator is a key pivot in this. And more we're finding that the regulator is lagging what's happening actually in reality. So we do need clarity on the rules, but this really should have happened earlier. And it does create uncertainty for now traders that are now licensed and their potential customers and suppliers. What is the future? So it creates now another 12 months or nearly a year of uncertainty around that market. I imagine a lot will just carry on, business as usual, but it does create a new risk. So really it says that the regulator is not fully capacitated, is not staying ahead of the transition and the demands of the transition, which it should be doing. And I think there needs to be a hard look at how we help the regulator out, how we capacitate it, maybe through the NECOM structure, really look at how to get the right people in there to give them additional capacity to deal with a lot of these moving parts that are coming. As I say, this wholesale market is coming, supposed to be launched in April next year. It's a major change to the way the electricity supply industry will work. And, can Nersa, doing all this normal business, plus now doing the new rules for trading, can they apply their mind to the market code that's going to be needed for that wholesale market? Can they apply their mind to the license application that NTCSA has made to be the market operator while all these other things are happening? So I think it's a piece of work that NECOM really needs to enter, and we really haven't heard much from NECOM lately. I think there needs to be more visibility, because it feels like the transition is stalling all over the place. So we need to see that NECOM is working. We saw it was very effective in this waning of load shedding, in injecting something like 300 private skills during that period to help Eskom through that transition. But we really aren't seeing, during this period where there's a lot of haziness, also around the unbundling, around NTCSA. Is it going to be a full unbundling? How is it going to work? What is the time frame around that? Is it going to be a fully fledged TSO in 5 years, or transmission system operator? There's a lot of uncertainty. I think NECOM needs to step up at this point, not only to help Nersa catch up, but also just to ensure that the momentum around the reform, this is vital reform, is both visible and is going in the right direction, because from the outside it looks like we're stalling.
Thank you. That's the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis.